difficulties. So hopefully we will be able to get this going. If not, we will try again another time. So hopefully we will get Alex on here and get him to join us. So let's see if we can get him on here so we can start talking about mortgage stuff. So if anyone else wants to come on in and tell us what's going on in their market, that would be great. So Alex, let's see. Hi Jody, hope you're doing well. It's a nice gloomy day. Hope everyone's selling houses here in Chicago in all the rain. Technology, it's lots of fun. It's not always
Yes, I'm here.
All right, Alex.
Sorry,
All
I
right,
was trying to do this
finally.
on my laptop, but I guess it doesn't give me the ability to do this on the desktop. You have to do it through the phone, huh? Okay. Hey, we're learning.
Yes. I should have I know.
Good.
So
It's
how's it going?
rainy, miserable day in Chicago. How are you?
Exactly. Lots of fun.
I don't mind the rain part, but the 30-degree weather does not help with the rain.
I know. As long as it doesn't freeze. It's supposed to warm up later. So as long as it doesn't freeze and make driving too terrible, it's not so bad. So, all right. So Alex, you are a mortgage broker with Cross Country Mortgage, and you send out updates on Fridays. And last week you sent one about
financing.
Yes. So tell me a little more about the difference between if someone is looking to buy, if they want to get the different types of loans that they can get if they want to do some rehab work, whether it's a HELOC, whether it's a rehab loan, like what that would mean for a buyer or just someone wanting to do some work on their place.
We can maybe categorize it a little bit differently depending on the scope of work that they're going to be looking to do. If we're looking at a tear down situation or a complete gut rehab scenario, it's one type of a rehab loan. If we're looking at someone wanting to cosmetically upgrade their home that they're interested in, it's a different type of a program that I would suggest in that case. So to get into granularly into those types of options. So for renovation financing on a bigger scale projects, there are both conventional financing ways to do it as well as through government financing such as FHA. And maybe you've heard the terminology FHA 203K loans. That's the technical name for the FHA renovation mortgage. With conventional financing, with Fannie Mae, for example, Fannie Mae has a program called Home Style, Fannie Home Style, and that's a renovation loan through conventional financing means. Those are options that have been around for forever. The thing about those types of programs, they do handle bigger projects, obviously. It could be down to the studs types of projects, or even just a simple upgrading your kitchen or bathrooms as well. So they don't have to be huge projects to do those types of loans. But I'll get to the alternative option if it's a smaller project in a minute. But in my view, if you have to go big, if you have to do a major project, these are your kind of best products, okay? Those are the best solutions for financing. If you're looking to build the ground up, brand new construction, these are not the things that you're looking for with Fannie Mae and FHA that I just mentioned. These are renovation loans. Ground up construction, there's yet another option for that, and we also can work with a client for that. But to just concentrate specifically on renovation in this discussion, FHA and Fannie Mae option that I just mentioned, the way the typical process is this: you're buying a home that would require that type of a process. So you're not only purchasing as is property, but you're also preparing the budget and the scope of work to get the construction financing all at once. So you're closing one time to the acquisition of the property as well as the renovation project for the property.
Okay. But let me ask you the difference between the conventional and the FHA. Now, with the FHA, I know that there's specific appraisal requirements. How does that change? And my second part of that question, don't you have to have specific FHA approved contractors in order to do the work on the 203
right.
loan?
So yes, FHA has a bit more scrutiny to the process than a conventional Fannie Mae type of renovation financing. You must have a HUD consultant, and maybe that's what you're referring to with a HUD consultant is yet another layer of complexity in these types of loans where the lender will have this HUD consultant. HUD stands for Housing and Urban Development, which is the agency that finances FHA loans. And so a HUD consultant is a person that would verify or double check the work and the costs associated with this scope of work, the budget. All of it needs to be reviewed and approved by this HUD consultant, aside from the lender having to scrutinize the numbers as well, right? So there's these extra layers when it comes to FHA renovation financing because of the HUD consultant. If you're doing a smaller project under $30,000 with FHA, you don't need a HUD consultant. If we're talking about a bigger project, over $30,000 or so of the construction process, then you'll need a HUD consultant. With Fannie Mae, you don't have a HUD consultant. You don't need to worry about that extra layer of scrutiny. But the way that the lender requires the paperwork to be reviewed in order to be approved for this type of a loan, you must have a scope of work already put together with your contractor, meaning the plans, the specifications of everything, the budget. Sometimes, you need architecture plans. All of that needs to be in order before the lender will approve this type of financing. And since they're doing this all at once, meaning acquisition and the construction approval, you must have all those ducks in a row before you can close on this purchase. And sometimes, especially nowadays with how busy these contractors are, it takes a while to get all the ducks in a row.
Right. So, so in this crazy market, when properties are going so quickly, even houses that need a ton of renovation, these types of loans are not ones that I'm sure you did very often.
You're right. These are not the types of loans that we have to deal with on a daily basis at all. They're far and few in between because of the market that we're in, where, let's just say, and maybe you can concur, that we're in a seller market, especially heading into the spring market, right? Okay. So chances of the seller saying, yes, we'll wait 60 days for you to get your ducks in a row with your contractor are slim, right? So they'll likely take somebody else even at a lower price just to avoid this delay or uncertainty of your abilities to qualify for such a loan. So if you've got the right situation with the sellers willing to wait, I would say typically, if the contractor is available, 60 days is typical of a time frame to close on those types of deals.
Got it. So if you just if you have a property and then one more question back about these types of loans. Are the interest rates typically higher on those as opposed to just a
Very,
straight FHA
very,
or
very
a
much so. That's
conventional
another,
mortgage?
unfortunately, kind of the drawback of these types of loans is that they're more expensive. Not only are the interest rates higher, but there's additional costs associated with these types of loans. And the way that the pricing has been in the last year or so, ever since the market's changed in the mortgage world, these types of loans will also most likely have points associated with them in addition to the higher rate. So you're paying higher costs at closing. You're getting a higher rate, of course, than the typical mortgage would allow you on FHA or conventional. Probably, let's assume, and don't quote me on this, guys, but maybe about 1.5% above the market right now of where the market, right.
Wow.
Now, keep in mind, these are short-term loans because the construction, let's say it takes 6 to 12 months to do whatever scope of work you're looking to do. The lenders understand that this is a short-term solution for borrowers. You don't need to keep this mortgage forever. You could always refinance out of it. And so they're thinking, if it's a short-term solution and they're not going to keep that loan long-term, they're going to collect up front. So that's probably why the costs are higher up front, right, for these types of loans. So that's a drawback. And not only is it there's a drawback because it's a little bit more of a convoluted process with having the contract involved, the lengthier process of approving that type of process, but also it's costly there. So you have to be really, truly sold on the process and project as a buyer and have a type of seller who's willing to work with you on it to go through this, right? I'm not discouraging people, but being very...
No, right. But we need to be transparent about any of it, right? I mean, that's the importance of a lender, being transparent about any of the loan products that you have, as opposed to all of a sudden you get the closing statement and they're like, holy moly, like, why is the rate so high?
Thankfully, in this day and age, for the consumer protection purposes, lenders have to disclose everything up front. There's no chance the consumer going to the closing to find out that their fees are higher than expected because everything is so transparent now in our industry, which is a really good thing for everyone's case. We don't want any surprise. It's not fun.
Right. But that's why, I mean, I'm glad that you're saying that, yes, it's much higher. Right. And then for, I mean, nowadays, like you buy a house, right? And typically, like I know some of my clients, we get appraisals back and there's already built-in equity in some of the properties. So then typically to get, and then if they want to do work and they need to get a loan, like what are their options? Like nowadays, if someone, bought something and they just got a conventional or they got an FHA mortgage up front and now they need to do some work to their property. They've been there for, 6 months to a year and it's like, okay, the bathroom needs to be redone or the kitchen needs to be redone and whatever.
So thank you for bringing that up because that was going to be the second part of the options that are available to these consumers. So if the property is livable, they can purchase it as is, even got ugly counters and terrible bathrooms and all the other stuff that they don't want to live in long term, but it's livable, right? No issues of financing that type of property to close on it initially, at least. And then the fun part begins. They want to do some renovations, some sprucing up the place to make it. So in those instances, and how often does it happen where the buyer is willing to buy something that needs some refresh, but they've used up all their money for the purchase. And now they're cash poor, essentially, right? But they have all these grand ideas about updating their home. So for that, I don't recommend, especially if it's not a a gut rehab situation, of course. I don't recommend going through this 203K stuff. I don't recommend going through the Fannie Mae Homestyle program because they're both very similar type of processes. And one thing I didn't mention on when we were talking about those programs is that once you've closed on this purchase and you've got the construction funds available, it's not like the borrower has a bunch of money sitting in their bank account now to dole out to their contractor. It's the lender that controls that part of the process, okay? And
got it.
as the project commences and certain parts of that renovation project are completed by the contractor, the lender then sends out their folks, their appraiser, who will then verify that a certain part of this of the project has been completed, and now they're able to release some of those funds directly to the contractor from the lender to pay them out for what they've done so far, right? It's a very tightly controlled process out of concern that the lender is going to just give money to the buyer and the buyer somehow mismanages those funds if they're not careful, I guess. But that means that as the borrower, as the homeowner, you have no control over that, and you're at the mercy and the whim of the lender's appraiser to agree with the contractor on the scope of work that has been completed and the quality of the work that has been completed in order for them to release those funds. And on occasion, I'm not saying typically, but on occasion, there could be disagreements between the contractor and the lender to get paid the amount that they expect to get paid for the work that they've already done. Not because the lender is trying to screw them some way. It's just that the lender might view the completed work not up to a certain standard, or that the contractor is asking for something that they expect to be paid for, when the lender doesn't see that level or the standard being met for what the contractor thinks they've done. So there's some,
got it.
Again, convoluted process, guys. So beware of that, right? So this other option that you were asking me about, what if someone just wants to do some renovation of bathrooms, kitchens, or whatever the case might be? There is a home equity line of credit product that a cross-country mortgage recently partnered up with a lender that does home equity lines of credit. That means you're not touching a mortgage, okay? This is a second lien against the property. It's a second mortgage, but it's a line of credit. And that means that you can draw on that line of credit as you see fit to do the work that you need. Now, it doesn't mean that the lender is just going to give you however much you think is necessary for the project, because there's still some control of how of the lender's ability, or not ability, but the lender's scrutiny of the project's scope of work too. So to explain this a little bit better, let's say you've put 20% down in the purchase and used up all your money, but you need a whole lot more than the 20% you put in to do the work that you want to do. This lender will allow you to borrow as much as up to 125% of the current home's value to get to the future equity of this home after the renovation is done, because your home equity will grow with the improvement that you're making. And so the lender is willing to give you money based on the projected future value, up to 125% of the current value, to draw against that future equity to do the project. Now, again, they're going to require that the borrower provides them the scope of work. Just like you would with Homestyle or a 203K loan, you need to show the lender, this is how much it's going to cost, this is who's going to be doing the work. So that part is still vetted and necessary. But once the lender approves the scope of work, you obtain the control of paying out those funds yourself as a homeowner, because it's a home equity line of credit. Just like a regular home equity line of credit, you get access to the equity in it, and then you just write checks out of that line of credit. So no longer do you have to worry about the scrutiny that the lender would put that contractor through every time they request a draw. No, there's no HUD consultants, because this is not an FHA loan. It's just a simplified process that you as a homeowner are able to do based on future projected equity that you're trying to create with this improvement in the home. And you can go up to $500,000 worth of renovation work that needs to be done with this type of a loan, a line of credit. So it's a really unique situation. And as far as rates and fees, it is a variable rate because it's a home equity line of credit, and by nature, lines of credits are variable rate. It's based on prime plus something, a margin. And in this particular situation, depends on credit scores, depends on loan to value ratio, but it could be somewhere around prime plus 1.25, which is a standard regular home equity line of credit that you go to your bank to open up against your home. You might be able to get those types of terms, but this is up to 125% of the current home value. So you're tapping into future expected equity at prime plus 1.25. That's pretty darn good in comparison. So it is variable. That's the drawback, but it's a line of credit. So if you don't use up all of that limit of the line of credit, you only pay for what you took out. So if your project comes under budget, great. You don't have to pay for the whole thing, or you don't have to pay for the whole limit of the line of credit is what I'm saying. You just pay as you go, right? And it's interest only. So if you want to minimize your out-of-pocket expense during the construction, you just pay the interest. So that is a great solution for those who don't have the funds, but have a sizable project in mind. 125% is a lot of equity you're tapping into. Putting 20% down. Let's just assume this for a second. You can do up to $500,000 max, but if we're doing the math on a $500,000 property, 20% down they would have put on the purchase, that's $100,000, and they can tap up to 125% of the current home value. So what is that? $625,000. So we're talking about $225,000 in this hypothetical example to work with. That's a lot of money, right? So
yeah, wow.
And you don't have to deal with changing the mortgage rate of that mortgage that you just took out. So for those homeowners who had bought a home maybe even a couple of years ago when those rates were in the 2s and the 3s, and they don't want to touch that mortgage, obviously, right? But they do have ideas and plans, to improve their property. Well, they don't have to refinance into this home style loan or FHA 203K loan, which would carry a much higher rate today than it did a couple of years ago when they took out the lower rate loan. A line of credit would be a great solution in this case because it's not mortgage that you took out. Right?
Yes, it sounds. And do you think it's important for anyone to have an open home HELOC?
That just in general, yes, but that not for renovation reasons. They can use it too. And that actually brings me to another idea. So the product that I just told you about is specifically for renovation financing.
Right. No, I know, but it just made me.
I'll tell you personally. Once I bought my home, I opened up a line of credit for just rainy day purposes, right? And I have a zero balance. I don't need it, but I have it. So yeah, not a bad idea to have it. I do have a lender that allows you to go up to 100% of the current home value for lines of credit, not a renovation line of credit, just a regular standard credit. Most banks that do lines of credit don't go up to 100%, but this particular credit union does, and I can connect people with them if they need that. But those rates are really good too, like prime plus 1 to go all the way up to 100% equity. Maybe that's the renovation, and you don't have to deal with any plans and specs in that situation. It's just a standard line of credit up to 100%. So that's another one that is an alternative solution to your renovation mortgage solutions.
So you have a lot of different options if someone is looking to do any kind of renovations, and so you're a great person to talk to
I'm available
and pick their brains.
to be a resource to answer questions about these types of things and people in the right direction for sure. If I'm unable to do that, or if I'm unable to help them with their particular situation, or if I don't do it for one reason or another, I might know resources that could outside of Cross Country Mortgage. So even if it doesn't benefit me personally, I will be able to at least direct them in the right path.
Okay. Well, it's great. And I don't want to, I mean, you could probably go on and talk for a long time, but I don't want to keep you. I told you it would be about 15 or 20 minutes. But, right, sure. Exactly, after the technical difficulties. But you and I grew up in the same neighborhood. We went to the same high school, just a few years apart.
Let's keep it at that, yes.
Right. Well, for me, I can say a few years, right? You, yeah, a lot. I graduated a lot.
Well, I just celebrated my birthday a couple of days ago. I am a middle-aged man. I'm yes. Thank you.
Happy birthday. If you're middle-aged, I don't want to know what I am. But anyways, I don't hide my age. I wear it well. Yeah. So I'll just say, I just went back to my alma mater, and it was the first time. I mean, it'll be 30 years that I graduated University of Kansas. It was the first time I went back to Allen Fieldhouse. So that's showing my age. So I just have to ask, and I don't even know if it was still there. Did you ever go to Irving's across from Lutheran General? Was it even still there?
I don't think so. No.
Grew up?
Even Lutheran General has changed. Just the look of it is completely different from what you remember it.
I know, because I used to work there in high school. Okay, and did you go to Deep Park?
But where I grew up, it was a very kind of insulated, closed neighborhood. I don't know if you know this, Bay Colony. There's a big pond in the middle, and the kids would play in the playground in that community. And I didn't have to go to any other park because where I grew up in Bay Colony, we had everything there. So, but I drove, I rode my bike all around. Of course, I remember that. Yes.
Well, because Deep Park is where you went for like basketball leagues and baseball, baseball. And I don't know if you played any of that.
I did not play any organized summer leagues or anything like that. Kids in our neighborhood in Bay Colony would play basketball on our courts. And I remember playing every single night throughout the summer and into winter time. As crazy it might sound, like I was so hooked on basketball as a kid, I would come out with my snow shovel out the snow and play basketball. That's how crazy it was for me.
Yeah. Well, my dad's name is on the gym, the basketball gym.
That's so cool.
At Deep Park.
Whenever I'm back and my dad still lives in Bay County, so I have to swing by Deep Park. I try to go into Maine East High School over the weekend, just as I was driving back, and I have a lot of nostalgic memories of it. I wanted to walk in, and I didn't realize that you can't just walk into a high school. We live in different times.
No, and they've totally redone. They totally redid it. When we had our 30th high school reunion, they did. It was the last time. We were the last class that got the old tour, and they totally started gutting it right after.
I think they just finished it.
So it's totally different.
But did you know, and I'm sure you probably know this, but did you know that Harrison Ford went to that high school?
I did. Harrison Ford, son of Margulis, and Hillary. Hillary and I had the same history.
What's his name?
Professor. Yeah.
I don't know.
Paul. Oh my God, what is Paul? No, that's his first name. It'll come to me. My dad was friends with him. No, not Paul Olson. Um, oh my God, what is it'll
Okay.
come to me as soon as we end this. But the teacher that taught the radio station, and my dad were good friend, very good friends. He still checks
Got
in
it.
on my mom
That
every
is cool.
once in a while.
Well, it's a
Yeah,
beautiful
yeah.
campus. I think,
Hmm.
didn't they kind of do it based on UCLA or Berkeley? I can't recall, but I heard something about the architecture of it is supposed to be a replica of another college campus building. You can't hear me? Oh, there you are.
Yeah. So, yeah, I don't know, but yeah, it is a very historic building. And then when you look at like the other two
No,
mains,
no, no.
they're not as
We
pretty as
we've got the
ours.
best one. The main. That's
We
right.
do, and
That's true.
the original. So, yeah. So, well, Alex, thank you so much. I really do appreciate your time. And if anyone does have any questions about any kind of rehab loans or anything else, feel free to reach out to
No
me and I
problem.
will
Yeah.
connect you to
Thank you very much,
Alex.
Stacy. And if the simplest way it would be to connect with me by email, alex@ccm.com. It can't get any easier than that.
CCM.com.
alex@ccm.com. That's
Yes.
right. Of
All
course.
right. Perfect. Thank you. Have a great afternoon. Stay dry in this
That's right.
rainy, lovely Chicago weather. But we shouldn't complain. If it
That's
were
true.
snow, it would
I'm
be
all
a
right with this because
nightmare.
I know that spring is around the corner. Thank you for the
Exactly. All
opportunity.
right. Have a great day.
Hey, bye.
Uh-huh. Bye.